Welcome back everyone to our channel, Everything Jax Real Estate. My name is Justin. I'm a realtor here in Jacksonville, Florida with the Realkeeper Home team here at eXp Realty. And in this video, we're going to be going over the market update report for the Jacksonville Beaches and the Jacksonville Southside area as it pertains to October of 2023. Now, as we go into the back end of this year, it's important to know that the market does change seasonality throughout the year, but we are seeing some other changes as well, which I'll highlight in this video, such as the supply of homes, the amount of homes going under contract in relation to the amount of actives on the market, as well as how the prices and days on market have changed over the last couple months. So when I come back, we're going to go ahead and go over all that great information, so definitely stay tuned because you'll want to hear what I have to say. Welcome back everyone. So before we get started on this video, don't forget to like this video, subscribe to our channel, and ring that bell so you get notified when we post more content like this in the future. All right, so as we start off with the Jacksonville Beaches and Southside, we're going to look at the amount of homes that are on the market, as well as the amount of homes that are under contract as it relates to October. So what you're going to see here is we had a total of 730 homes in the area that were on the market at some point in October. Of those 730, 254 of them are already under contract, so they're in a pending status. That leaves us 476 that are still available for people to buy as of right now. Now, what it does mean though is that our pen to list ratio is actually 34.8%. That pen to list ratio just measures the amount of homes under contract in relation to the amount of homes that were actually available. And as it relates to September, we actually saw that rate come down some. In September, the rate was closer to 37%. And so what it tells us when we look at the numbers is that we actually had a slight uptick in homes that were on the market and a slight tick down on homes that were under contract. So when you take into account those two factors, it's really no wonder that the percentage went down a few percentage points from last month to this month. And to put it all in perspective, the higher that percentage is, the better it is for sellers because it means that most of the homes in the market are going under contract in a reasonable time. So for buyers, having that percentage go down some is probably a little better for you, but at the same time, it just means there's a little less competition, but there still is competition. Now, another thing we're going to look at is we're going to look at what made up the largest amount of homes listed in October. And what we saw is that homes in the $400,000 to $600,000 price range made up the majority of homes on the market. And the median list price actually was above that. The median list price was actually $625,000. So although the majority of homes on the market were between 4 and 6, there were still more homes above 6 than below 4, which is why the median list price was $625,000. That is actually a little bit of an increase from the previous month. So definitely it just means that sellers are still trying to get top dollar. However, what we'll look at further in the video is how does that relate to what they're actually getting. So again, trying to get a certain number and actually getting a certain number, two different things. Now next we're going to look at the graph here, and in this graph here, it's going to measure the amount of homes under contract in relation to the amount of homes that were actually for sale. And what you're going to notice is the majority of price points have more homes available compared to the homes that are under contract, which ultimately it means that there's more options for buyers. Means that for sellers, you actually do have some competition now. However, it is still pretty much just a continuation of previous months. So it's not like you have that much more competition, but you still have more competition than you maybe would have had a year ago or 2 years ago. We also see that there was a total of 1,192 contracts that closed in the last 6 months. That number is actually down a little bit from last month's market report. And what that tells us is that we're seeing less homes selling, but not a huge bunch. Again, we're talking a very minimal number to where it doesn't mean that homes are sitting extensively long and not going under contract and selling. It just means that we're seeing a little bit less of that, which part of it is seasonality. Typically here in Jacksonville, Florida, when you get to September, October, November, it tends to slow down a little bit. So to start seeing some of that data roll in and starting to see that those numbers are a little bit less as far as homes that went under contract and sold, it's understandable. And ultimately, the other important thing to look at here is the median sold price was $480,000. That's actually a little bit higher than last month, which just means that even though less homes are selling, the ones that are selling are still at a slightly higher price point than the ones that sold just last month or the last 6 months of data. We also saw that 238 homes failed to sell. Failed to sell, I always go over this in all the videos. It pretty much can be multiple different factors. Sometimes it can be factors that has to do with the seller. Sometimes it could be factors that has to do with maybe even the realtor who's listing the home. There are always different factors that can occur that could cause a home to fail to sell. Such as job promotion, maybe taking someone out of a city. Maybe that promotion fell through, and so now that person's no longer needing to sell their home because they're staying. Could be that ultimately the photography for the home, the description for the home, the price for the home may not have been what was required to get it sold in today's current market. It could just mean that the condition didn't match what buyers were willing to pay for that home, and so the seller took it off the market because they didn't have to sell, they wanted to sell. So a lot of different factors, but definitely always important to highlight that in these videos because typically you will always have homes selling, you will always have homes not selling. And sometimes people like to look at those numbers and say, oh, well, the more homes selling, better is for sellers. The more homes not selling, better is for buyers. And there is some truth in that, but ultimately a lot of it is cyclical and seasonal. So realistically, it's good to look at those numbers, but it's not an end all be all. Next, we're gonna look at the days on market for the homes that did sell. And what we're gonna see is that the median days on market for the past 6 months was actually 25 days on the market. This is actually a small decline from the previous month's data, which just means that the latest month that last market update was taking into account actually had a little bit longer time on market versus the latest month this month, short time on market, so that number did go down. And so ultimately we saw that it was 25 days on the market as previously highlighted. We also were at around $480,000 for the median sold price. And so those are things that are good to highlight as we look at long-term projections. But let's look at short-term projections. And short-term projections will actually show us that in the last month, in the last 30 days, the days on market actually was 24 days. So for this area of Jacksonville, the Beaches and Southside area, we actually saw the days on market go down in October in relation to what it was for the last 6 months in total. Now, you may ask yourself, okay, what does that mean for price? Well, through the last 6 months, the median sold price was $480,000. In this scenario, when we look at the last 30 days, we actually saw that the median sold price was $498,000. So we saw a pretty substantial uptick on price while also seeing the days on market go down some. Those are obviously great indicators for you as a seller. As a buyer, it does mean that potentially maybe there was better homes on the market in this past month than the last 6 months in general. And ultimately, I would say this is probably not an occurrence we'll see as often where we see days on market go down and price go up, but it is good to highlight because if we continue to see that in future months, it does mean that this area of Jacksonville is still staying very strong despite the increase in rates that we're seeing currently. We're also going to see here the median list to sales ratio for the area was 98.2%. That means for every $100,000 of price that someone's trying to get, a buyer's offering them and going under contract with them for $98,200 worth of that $100,000 price. This is actually a small decline from last month, but not to the point where it's really even worth highlighting. And realistically, it does still mean that, in essence, sellers are still getting close to what they're asking from buyers. But there is some room there. So again, it's really a good positive both sides. It means that buyers are having the ability to leverage and be able to get some reductions or some closing costs, but it still also means that a seller is still getting close to what they wanted originally. So definitely a good win-win. It's better than it was a couple years ago when you would see over 100% of for the list to sales ratio. And so really at 98, we may see that come down some, but it's a good percentage right now for all parties. We also see here that the absorption rate for the area was 2.4 months of inventory. Now, 2.4 months of inventory means that for this area, if no new homes hit the market, as of today, we'd be out of homes to sell in 2.4 months. Now, this is actually an uptick from September. September was 2.1 months, and so ultimately, the more homes on the market, the higher that percentage, that absorption rate is going to be. And it's a good indicator of what kind of market we're in, whether we're in a buyer's market or a seller's market. And put in perspective, equilibrium, where it's not a buyer's market and not a seller's market, is roughly 6 months of inventory. So when we're looking at 2.4 months when taking out the last 6 months, it does mean that we're starting to get more, I wouldn't call it a buyer's market, but we're starting to lose that hyper seller's market. And it's going to be good indicators we continue to move forward, because realistically, if that 2.4 starts going up further, then it's all kind of relates to each other. So if we start seeing that go up further, we probably will see the list to sales ratio come down some, because again, if there's more inventory, there's going to be more competition for sellers to deal with, and buyers will be able to potentially reduce what a seller's wanting to get with their list price. We're also going to look at these two graphs right here. So we're going to look at the median sold prices, and we're going to look at the median days on market as it relates to the last 6 months. What you're going to see here is we're actually had a bit of a dip in August and September when it came to the median sold price. That dip is actually something that is now starting to transition back to an increase with October. And so we're starting to see that the prices are in fact coming back up for this area. Now, it remains to be seen if that's going to be a continuing trend, or if October was a bit of an anomaly. Sometimes it does happen. That's something that we're going to keep an eye on, because ultimately, as we continue to move forward through the rest of this year, it will be important to see, okay, are we getting back further up on the price point for the sold values, or values starting to come down some due to the rates. The other thing we're going to look at is median days on market. The median days on market is actually going to show us that although we did see September and August and July with some low months or some low days on market, October actually did have a low days on market. In this graph, it shows that it's closer to 30 days, but the data actually does support that it was actually 24 days. So realistically, that's actually more the way that this graph is centered. Is the November data point you see there is actually more concerning to October. So realistically though, anything under 30 days on the market, the biggest thing to highlight from this is anything under 30 days on the market is a very solid market for buyers and sellers. It means that homes are flowing through the market very well, and that realistically, sellers not having to wait too long, and a buyer is making a decision in a fairly reasonable time for the right house. So definitely something to highlight as we continue to go through the market data. Now lastly, we're going to look at this table here. And this table is going to be very important for us because it really highlights at different price points what exactly the absorption rate is. So we know that for the past 6 months, the absorption rate for the area is 2.4 months of inventory. But how does it relate to different price points? When you start looking at the price points, you're going to notice that anything under 800,000 is going to be in the red. Red is great if you're a seller. It means that it's a hyper seller's market because you're under 3 months of inventory. And it just means that the homes in those price points are typically going to be selling for top dollar and relatively quickly if the condition makes the most sense for buyers. But what we do see here is, in relation to, for instance, last month's market update, is a lot of the higher price points, we're starting to get more into those oranges, and you even see a yellow and a teal. And what that tells us that the higher price points are starting to see more inventory, and they're starting to see more days on the market. And so what that's doing is that's increasing the absorption rate for those price points, because there's less buyers for those price points in relation to sellers, and the buyers who are in those price points, they're not necessarily making a decision maybe as quickly, and so they're able to negotiate a little bit more because of that. So realistically, the thing to take away from this is if you're under $800,000 in this area, the Beaches Southside, you're still going to have to deal with a little bit more of a seller's market where there might be a little more demand. But if you start to get over that $800,000 mark and you are looking at million to multi-million dollar price point, there's a lot less competition, a lot more room to negotiate potentially, and so you do have a lot more options, so to speak. All right, so that's going to wrap up our market update for the Jacksonville Beaches and Jacksonville Southside. If you have any questions as far as anything I went over in this video, or anything that you have questions on that I didn't go over, definitely feel free. My contact information is down below on this video. Feel free to reach out to me on my Calendly. You can schedule a time on there for us to hop on one Zoom call, meet face-to-face virtually, and get any of those questions answered you may have, because ultimately if you are wanting to know more information about Jacksonville, or you are thinking about moving to the area, and you want to know which areas may make the most sense for you, I can definitely help with that. I'm born and raised here in Jacksonville, and that's always my goal, is to help ultimately figure out what neighborhood and what location makes the most sense for you and your family. So also don't forget, make sure to like, subscribe, and ring the bell in this video so you get notified when I post more content like this. But until next time, I'll see you guys again.